Welcome to the 2025 Economic Preparation and Depression channel. Thank you for joining me on this June 19th, 2025 edition. We're going to be talking about briefly the unemployment rate as well as the U.S. dollar going down, Federal Reserve meeting latest notes as it already became available as of yesterday, and gold prices falling as things continue to go down. So Oregon unemployment rate rises to 4.8%. Job losses hit key sectors here. As you can see, unemployment rate in Oregon climbed to 4.8% in May. That's up from 4.7%. And many states are going to be experiencing this unemployment rate in local areas increasing versus the national unemployment rate increasing here. So you can see that job gains were observed in leisure and hospitality, transportation, warehousing, and utilities, healthcare, and social assistance. They grew by 900 to 1,000 jobs. Of course, manufacturing jobs lost in Oregon, 1,200 jobs. Business and service sectors decreased by 900 jobs here. And we continue to get losses in those areas as always because we're not manufacturing anything but debt in this economy. Now, the U.S. dollar index moves above $99 due to Fed rate hold. So the Federal Reserve Bank, as you know, voted yesterday to hold rate steady. As I told you, as I predicted, they'll hold rate steady until the fall, October and November timeframe. We'll see how that goes. They're going to keep the policy rate unchanged to 4.2 to 4.5% in the range of June. Fed Chair Powell signaled that inflation could rise in the upcoming months. That's something that we also talked about in this channel. So you know that inflation is going to be rising, and not just in gas and food costs, but it's going to be rising in other costs as well. Utilities, transportation, input costs for small businesses to get products across the country, and so the U.S. dollar is under pressure, and we'll see how that holds. But the Federal Reserve holds its benchmark rate steady according to today's FOMC meeting. That's the Federal Open Market Committee meeting. That's where they adjust the money supply, and they also adjust the rates if they choose to decide whether or not to adjust rates or not. And so no surprise here. I told you guys, ladies and gentlemen, on this channel that they will hold rates steady until later on this fall and winter, when they'll make the decision either to raise it by 25 basis points or to cut it by 25 basis points or maybe 50 basis points. We'll have to wait and see. This is the approach that they're taking. Central Bank also expects inflation to worsen in the coming months. That's no surprise there. But it still foresees 2 interest rate cuts by the end of the year. So even if they do these 2 cuts, there's going to be small cuts. Like I said, 25 basis points, which in the grand scheme of things is not going to make a great difference in this economy where we're at now. So what we're going to be seeing here is that they're saying that the reason why there's still uncertainty with the economic outlook but remains elevated. Wednesday's press conference, Powell underscored the relative strength of the economy, quote unquote, citing solid labor market conditions, including the 4.2 unemployment rate and a low inflation rate and improvements in business and consumer sentiment. Well, he has to keep this up. He has to continue to keep a positive face, but people know on the streets, on a lot of these cities across the country that, it takes a lot of money, and because the purchasing power is going down. That's the key thing I want to bring to you. It's not so much that the economy is not producing jobs, is that the purchasing power of the U.S. dollar is going down because obviously, when you continue to print up money, the money supply grows, and that means the value of dollar becomes less and less. That is the big problem that many people are facing with this economy. So on paper, it looks like they're rich, quote unquote, because the housing value goes up or stock portfolio goes up. But in actuality, the money is actually worth less because you can buy less on the streets. That's the key thing. And this is what many people are facing, many Americans are facing across the country, because Powell says he expects that the Fed, quote, will learn a great deal more on tariffs over the summer, and that developments will inform their thinking moving forward. Well, we know tariffs are, good and bad. I mean, they're going to be supposedly bringing in all this tax revenue for the country, but at the same time, as you know, it's going to be raising prices. And that's going to lead to a little bit of uncomfortable pain for this summer and the fall as people cut back spending. And it's really supposed to be, honest with you, it's really supposed to be a deflationary type of depression. But because asset prices are so high, and the bubble is so high in everything from stocks to the commodities to housing, as you know, to land, to oil, everything is just in a bubble that popping this type of bubble will just be disastrous on so many different levels. And that's what the Federal Reserve Bank obviously is seeing in the data, but they can't really bring it out. They can't really say that, but they have to kind of they're trying to let the air out slowly. So gold prices fall as Fed pause. Now gold prices, as you know, was above $3,300 an ounce, and now that we have this pause in rates, of course, we expect a little bit of pullback with gold, silver, and platinum. But platinum hits 10-year high as it continues its assault on the markets here. So gold prices fell in Asian trade on Thursday as the Federal Reserve hawkish stance strengthened the dollar and pressured bullion, while rising geopolitical tensions with the Iran-Israel conflict continued to make an impact. But platinum reached a 10-year high during Asian hours, driven by tightening supply and rising demand. So the precious metals are still hanging on. Crypto is still doing okay, as far as I know. But there's going to be people still looking to alternatives, and the BRIC nations as well are going to be looking to alternative currencies, alternative means of doing business outside of the U.S. dollar, as pressure is mounting on all sides. So the key things to watch out for this week. This shortened week here, this abbreviated week, is going to be on Friday. We're going to see more of the manufacturing numbers to see if that's also going down in tandem with the unemployment rate. We're going to see also watch out more states, and more states have more rising initial jobless claims, not just on the West Coast like states like Oregon, but we want to see more of the Midwest and more of the Northeast. Those are key sectors to see if this unemployment rate is going to steady rise in some of these states to 5%. So officially, anyway. So we have to wait and see how that plays out. In any event, I hope you have a safe and wonderful holiday if you have it off. If you don't, get ready for this weekend. This is the first weekend of summer 2025. Stay cool. I heard it's going to be a heat wave for 2/3 of the country. And make sure you stay hydrated and continue to prepare. God bless. I'll talk to you very soon.